Hello and welcome to BloombergQuint. JSPL has reported good set of numbers in line with estimates. Well, the debt has come down significantly, but what's the outlook looking like and how much more of debt reduction can be expected going forward? Let's actually understand from the management of the company, Mr. VR Sharma, who's managing director of the company. Hello and welcome to BloombergQuint, sir. Hi, this is Nickey.
Thank you. Hi, Nick.
I'm going to be starting off with the standalone debt to, Ebitda per ton. That forms 33% uptick there year-on-year basis. What can be expected going forward, especially since we're recovering from the pandemic situation and the normalcy seems like it's resuming?
Good, thank you. Q2 was an excellent quarter for us, and we have done ever highest EBITDA achievement. We have done ever highest of production, and we have done ever highest of PAT. And Q1, Q2, we could reach to 3.5 million ton. The growth over last year is around 11.4%, which is a record growth in terms of Indian steel industry. Perhaps the other steel industry, they have not done even a positive growth, but we could do 11.4% of growth. Secondly, EBITDA, we were at 11,500 rupees last year, and now it is 12,600 rupees. Last quarter was 11,700 rupees, and there is an increase in per ton basis, 900 rupees per ton. That is an increase in EBITDA. Overall EBITDA is 2,700 crores plus, and we are maintaining 31% EBITDA margin, which is perhaps the best in the industry as of now. And the numbers are quite good. So now your next question was the debt reduction. So we started in this financial year with 35,000 crore. We reduced around 5,000 crore in the first quarter, and then finally, when we reach to this year, end of this year, we will be around 25,000 crore. Why the breakup is following: number one, from 35,000 crore, we are reducing by Oman divestment, and the level comes to around 29,000 crore, and 5,000 crore we are paying in the entire year. That is 1,200 crores to 1,300 crore rupees per quarter. And finally, we will land at around 24,500 crores to 25,000 crore by the end of the year or the opening of the new year.
Okay, that's a significant debt reduction, I must say, because the street was worried a little bit when it comes to the kind of leverage, but of course that is also an issue which seems to be solving at this point of time. I would also want to understand the sales mix currently. What percent of the value add currently formed your overall sales mix? A, and B, what kind of pricing power do you see for value add products versus long products?
Yeah, thank you. You see, during pandemic, we were exporting about 72% overproduce. But in Q2, we reduced our dependence on exports significantly, and we came down to 42%. And now Q3, our exports will be only 15%. This is one area. So this means the demand from the local customers that has picked up. So the demand is coming from the different segments, and I would say across all the products, the demand has increased and also the prices have increased. Like, for example, plates, we are the largest plate manufacturer in the country, and we are now supplying very specialty plates. We don't produce ordinary plates for general fabrication purpose. So we are supplying all the value-added plates in the country, and that is another plate which is called quench and tempered. So that is another a different category of the plates. Then, nowadays the cryogenic application plates for the cryogenic oxygen storage tanks. Because of the pandemic now, most of the country is short of oxygen, and the transporting oxygen from one location to another location as well as storing oxygen. So you need very specialty plates that we are doing. Then apart from that, we are also manufacturing now the plates for the shipbuilding and for the defense industry. So that is another area, and the boiler grade plates. Now the next product line is, which is a very highly productive line, and I would say the high EBITDA margin line, that is rails. We are now producing 1080 head hardened rails for the metros, and also now R260 grade of rails to Indian Railway, as well as 1175 grade of rails for the Indian Railway. So these products are very high value added products where the EBITDA level is more than 15,000 rupees. So on an average, 12,700 rupees of EBITDA as of now. That is quite good. And the product mix is excellent. So like transmission towers, angle iron, channels, beams, rails, plates, and hot rolled coils. Of late, hot rolled coil market is very strong, thanks to the projects, the irrigation projects, which are launched by various state governments, and that is consuming a lot of hot rolled coil. And today, the market level is about 40,000 rupees ex gate, ex factory, which is pretty good. Though the iron ore prices have also increased, but if you see the overall, the steel industry is getting good margins as of now. So I think all this pandemic situation will be over, and the entire steel industry will come back very fast.
Mr. Sharma, I was just wanting to understand if you could put a number, because long products pricing power has been relatively sticky. So with this kind of seasonally strong period that the entire industry has entered in, what kind of high can be expected going forward in H2? If you could put a number down to that figure or a ballpark estimate of where do you see the pricing power right now?
You see, now if you see long products, I will divide into three different products. One is common product that is called TMT or rebars.
Right.
The second is angle iron in channel and small beams.
Right.
The third product is specialty products like the transmission towers and rails. So these are the three different categories. So the category which is today, I would say the low price category, that is TMT rebars. So the prices of TMT rebars, there are two kind of prices. One is from the secondary sector and the other is from the primary sector. The primary sector, the prices are running somewhere about 37,000 to 38,000 rupees a ton, ex gate, ex factory, plus excise duty, plus freight. Whereas the secondary market, they are running around 34,000 to 35,000 rupees ex their gate. So there is a difference of 3,000 to 4,000 rupees. But unfortunately, all these mills, those who are in secondary sector, they are finding it difficult to continue because the scrap prices are up, iron ore prices are up, and pig iron prices are up. And over and above the high prices, the material is not available. Only those companies, those who can manage iron ore from the vicinity of their locations of their plant, they are running significantly well. But otherwise, most of the plants are not doing well. The scrap prices have gone up by $320 per ton, and that is a level which has just jumped from $290 to $320. So the gap is about $30 a ton in last 2 weeks' time. So very difficult for them. Like a pig iron, from 25,000 rupees, it has gone up to 28,500 rupees. So the gap is pretty good. That is 3,500 rupees a ton. It's very difficult for the induction furnace people to manage the show. So this particular situation is going to prevail unless Government of India comes with some policy where the iron ore that is made available freely in the sense easily, and the production of iron ore has to be increased. That impetus on the production has to be given by Government of India. So if you see overall, the product lines and the prices are somewhere about 40,000 ex factory, like hot rolled coil and plates, 39,000 is for the angle iron channels beams, and 37.5 to 38,000 for rebar and the construction grade of steel.
That was a detailed breakup, I must say. Since you've already touched base about debt reduction, I would also want to highlight that the interest cost has come down significantly year on year in this quarter. I'd like to understand the reasons behind the same and also what can be expected going forward.
You see, there are three factors. First of all, we are not thinking to do any capex investment. So our aim is to reduce the debt and bring it down to about 15,000 crore by 2023. So today, with an EBITDA of say around 800 crores a month, that means we'll be touching somewhere about 10,000 crores of EBITDA in financial year. So this 10,000, out of this 10,000 crores of EBITDA, we'll be paying from accruals at least 5,000 to 6,000 crores rupees to the banks. So each year-on-year basis, we'll be reducing debt by 5,000 crores to 6,000 crores. Like for example, this year, as I told you, the closing of this year or opening of the next financial year will be about 24,500 crores. And if we pay 5,000 crore in the next year, that is 21-22, and another 5,000 crore in the year 22-23, then we reach to a level of about 14,000 crore. And by that time, our EBITDA will also increase to about 12,000 crores. So then you will see the debt to EBITDA ratio that becomes pretty strong. And over and above, today our H1 sale is total about 19,000 crore. And if you see the cumulative figures, then we are around 20,000 crore. And by that time, we'll reach to around 50,000 crores of sale on console basis. So with a 50,000 crore company on console basis, that is including JPL, and 12,000 crores of EBITDA, with 15,000 crore of debt level, I think we'll be a very healthy company.
Sure. I would also want to understand about the surcharge provisioning done at JPL. Is there a possibility of the reversal in any point of time?
We are working on it, and hopefully it is possible. But I think we can throw light on this maybe in next 15 to 20 days time.
Okay, then the two questions that I have in my mind, actually three, I'd say. I'd also want to understand a little bit about the sales mix. Right now it's at 3.5, and for the first half, and the target is around 7. H2 is relatively a seasonally strong period. We're somewhat resuming back to normalcy. With this kind of situation playing out, do you think you are now in a position to kind of go ahead and revise that sales target that you have, or would you still stick back to a conservative approach of having a 7 million ton by your side?
I think we can do easily 7.4 to 7.5 million ton, and this is what we are planning now.
Right, that's a small revision coming out there. I'd also want to understand the status of Botswana coal mine, because the company entered into a purchase agreement, and there was some details which is still pending, and I'd like to understand if it's completely there was the buyer's name was not disclosed at that point of time. I'd like to understand where do we stand with this issue at this point.
Yeah, the Botswana actually during COVID time, that has gone to back burner because the investors, those who were interested in buying it, so after even giving us a LOI, so they couldn't proceed. Perhaps they are facing some financial problems. But now we are working. One is Botswana, and the 2 iron ore mines we have in Africa. So total put together 3 mines. 1 in Botswana and 2 are in some different locations in Africa. There is iron ore. So all these 3 mines are annual now to how to sell it. Hopefully within next 2-3 months time, we'll find the right buyers. And it is not a distress sale. We are also looking and we are evaluating different offers. And as and when we find the right value for money, we will definitely sell it off.
Okay, I'm just going to drill down further on Botswana mine, because I just wanted to understand, since the financial viability of the buyer that you'd earlier, were in conversation which relate to this coal mine, that seems to be off the table. Could you just throw light at this point of time? How many parties are interested in this coal mine? How many people are you in conversation? Whether or not, since it's in advanced stage, what can be expected exactly out of this right now?
Yeah, there are 2 parties. Those are very serious, and both are having an understanding with South African electricity distribution center as well as the Botswana electricity board. So they want to put up a power plant there, and they want to supply power to government of Botswana, government of Namibia, and government of South Africa, and also to government of Mozambique. So this is what their business plan is, and if that goes well, then I think we'll be in a position to clinch the deal as early as possible.
What's the kind of consideration that we're looking at? Because you earlier said that it could be in the range of around 150 million. So, it's that kind of consideration would now change because of the situation that we're sitting at right now?
No, we have not changed the consideration amount. So 150 million is again our base price, and we are working with them. So there are 3 options going on. 1, outright sale. 2, that they acquire about 76% and we still hold 24%. And 3, that they take 51% and we maintain 49%. But our interest is to sell it 100%. But otherwise, if the deal doesn't materialize at 100%, then we are also open either to go 76-24 or maybe 51-49.
All right, that's you provided significant color on that, and also if you could help us understand a little bit about Saga Mines. There has been concern lingering around that. There has been a show cause notice. Jan, you were allowed to get the transportation done. Now again, there seems to be some roadblocks with regards to the transportation. How are you tackling the issue at your end, and when can you transport that particular inventory that you have in the mine?
Yeah, we have about 7 million ton plus inventory lying in the premises of SMPL, that is Sharda Mines. Now the issue is they had some team of people from the government in about 2 weeks back, and because of their the team was not happy, or the team was not in the agreement and the stacking of the material done by SMPL. I mean, this is what the SMPL told us. So the second point, what they raised, that SMPL cannot remove the material through trucks. It has to go only by conveyors. But here I would like to inform you that conveyor is owned by JSPL. So from the premises of SMPL, it directly comes to pellet plant of JSPL. It is not a public conveyor. It is not an independent company who is transporting goods from one location to another location.
Right.
They have 20 more customers other than us. So all these 20 customers cannot have the conveyors because somebody is deep inside the Odisha, somebody is in Raigad, somebody is in Raipur. So the trucks movement is a must if the mining has to be done. So I think that kind of stand by government officials, it is not justified and it is unnatural that how to evacuate the material, how to remove the material. So the material has to be removed either by road or by rail. In our case, it is a very special case where we have invested money to bring the iron ore through our own conveyor. So I think they were given a notice that why are you using trucks? But this is unnatural. If somebody is barred or denied that you cannot move your material through trucks, this is something very strange. The second point is why our conveyor is not running now. We discussed with Director of Mines what they are telling, that I3M, there is a code in the system which allows the configuration of weighbridge, which allows through satellite the clearing of the goods and the dispatches. So that control is in the hands of government. So that I3M code has not been released separately to GSPL. It is a common code given to SMPL, either for JSPL as a customer or for other customers. Since they were not happy or they were not in agreement that the truck movement should be allowed, that's why they blocked the I3M code. We discussed with the Director of Mines and other authorities. They are now working as to how to split it into two. One is for JSPL, who can pick up their material, and the other is for the rest of the other customers of SMPL. So I think in next couple of days' time, this will be resolved. Honorable Supreme Court has given this order, and I'm very sure that all government officials will honor the order of Supreme Court as they have been honoring since February to October.
All right, so you're pretty sure in the coming, if not days, maybe this month itself, you'd be able to transport all your 7MT inventory out from Sada Mines to the place where it's required, right?
Yeah, the total inventory cannot come because we used to transport about 35 to 40,000 tons a day. So that means about 1 million ton. I will tell you. So to bring 7 million ton, we need another 7 months time minimum, because we cannot increase the capacity of conveyor overnight. So what we are requesting to government of Odisha, that you please allow us about 8-9 months time. We'll pick it up and we'll use it. And suppose by any chance it is delayed, then we have no problem. We have enough stock available. We have 3.3 million ton of mines. Tensa mine, that is our captive mine, and that can jolly well give us about 3.3 million ton a year. And then we are sitting in the hub of iron ore. So there is no shortage, no dearth of iron ore in that particular belt of the country. And we have run our plant for last 6 years without SMPA.
Yeah, I'm sure there'll be a resolution soon coming to the fore for this one. All the best. But thank you so much for taking out the time and speaking to BloombergQuint. Well, for the viewers, this is the management of JSPL sounding pretty confident with regards to the debt reduction plans. It's pretty confident the Sarda mines also would not be impacting, or any judgment whatsoever would not be able to affect the profitability or the operations of the company going forward. And at this point of time, thank you so much for watching.
Thank you.